Okay, Dipesh Mehta, Senior Analyst IT, joins in from SBICAP Securities. Dipesh, good to have you on the show. What do you hope to hear from TCS? Because their guidance is more about reading between the lines.
That's right. Thanks. Good morning. Broadly, we expect TCS to deliver around 1.2% constant currency growth, but crucial to watch will be what they qualitatively indicate about next year, whether the trajectory of growth would shift towards double digit. And to get double digit, I think BFSI would be very crucial because 1/3 of the revenue which comes from BFSI is growing almost half of the company average. So if company were to change the track and returning back to double digit growth rate, I think overall commentary on BFSI and particularly US large bank, whether they have started spending and particularly towards third party, because earlier what trend we seen last couple of years, they have increased their spending but towards captive than third party. So I think TCS would be, the commentary around that would be very crucial to get overall trajectory of growth for overall Indian IT sector as well.
Dipesh, if indeed TCS does deliver as per market expectations, what happens to the stock given the kind of run-up that you've already seen, the fact that it's maintaining its leadership pole position within the large cap IT majors, and we're already nudging that 32 rupees per share mark on the stock? Do you then sense that there could be some consolidation in the stock, or an inline number would also trigger buying further, even irrespective of the kind of run-up that we've already seen in the stock?
I think Q4 numbers would not be that big trigger for stock to move either side. What would be crucial is what they indicate about FY19 and particularly what they guide for BFSI related spend to pan out over next couple of quarters, because that will set overall momentum for next year. And in last couple of quarters, they have signed decent size deal in insurance particularly, which is likely to provide momentum. But large US bank would be where management commentary would set overall tone and determine overall stock performance in near term.
If Infosys indication is anything to go by, do you expect TCS also could come out and trim their guidance? Because for the longest time they've said that look, we will stay between 26 and 28, and for FY18 they are likely to slip below that. Do you think TCS will come out in the open and admit that 28 to 26% margin band is now history?
Possibly. What TCS maintained from commentary perspective, 26 to 28, that time rupee level was different. Now if you look currently, for last few days we have again see rupee to depreciate. Now FY18, when they are likely to deliver closer to 25% margin, if rupee remains where it is today, my sense is they will likely to tone down that expectation. But in constant currency, considering when they guided that range, rupee was bit more weaker, I think. So management commentary broadly about CC terms, and considering current reality, I think it would be toned down to that extent.
Okay, Dipesh, we'll leave it at that. Thanks so much for joining in and telling us all about what to expect from TCS.